Hey everyone, welcome back to the deep dive. Today we're going to dig into something that's got a lot of people in the tech world kind of on edge.
Yeah,
We're talking about SMCI, big name in the semiconductor world, and they're facing some pretty serious questions about how they've been handling their financial reporting.
it's a pretty big deal.
It is, and a lot of you have been reaching out wanting to understand what this means, like not just for SMCI, but for the whole AI scene. So we're going to break down this really sharp analysis by a financial expert, Mimivis James, to try and make sense of it all.
Right, because it's one thing when a company has some accounting issues,
Yeah.
but with AI being so hot right now, I think it makes everyone nervous.
Absolutely.
I-
It's like, are we seeing a crack in the foundation here?
Yeah, and maybe this James does a great job in this analysis of really looking at the specifics.
Okay, so let's dive in the big question everyone's asking. Is this a sign the entire AI industry is in trouble, or is this just an SMCI thing?
Well, the analysis seems to point to this being an isolated case, like it's really rooted in SMCI's own history of problems.
Okay, so not necessarily a red flag for the whole AI industry.
Right, but it could still spook investors, at least in the short term.
That makes sense. Even if other AI companies are doing fine, this kind of news can make people hesitate.
Exactly. And that's why it's going to be so important for these other AI companies to be super transparent.
Like they need to go above and beyond to prove they're not SMCI.
I think so, yeah.
Yeah.
Detailed reports, independent audits, the whole 9 yards, anything to build trust and confidence.
Got it. So if companies can prove they're solid, the impacts might be limited. But what about the giants like NVIDIA, TSMC? Will they feel this?
The analysis suggests they'll probably be okay. They're just so crucial to the AI supply chain that these short-term bumps probably won't derail their long-term growth.
So those holding on to their NVIDIA stock don't need to panic?
Probably not. In fact, if NVIDIA or TSMC stocks dip because of this SMCI news, it could be a buying opportunity for those thinking long-term.
Interesting. So some might see this as a chance to buy low.
Huh.
Okay, but here's what I'm still trying to wrap my head around. If NVIDIA and TSMC are likely to be okay, who fills the void if SMCI stumbles? I keep hearing DL and HPE are going to benefit.
Yeah, the market's initial reaction, DL and HPE stock prices did jump today, but it's more complicated than that.
Okay, I'm all ears.
The demand for all things AI is so huge right now, it's unlikely anyone has the spare capacity to just absorb a ton of new orders.
So even if DL and HPE wanted to capitalize, they might not be able to.
Exactly. They're already running at near full capacity, fulfilling existing orders. Production lines are humming. They don't have warehouses full of chips just waiting for a new customer.
Right. It's not like you can just flip a switch and redirect all those orders.
Exactly. The market loves a simple story, but the global supply chain is anything but simple.
Okay, so if we can't just shift everything to DL and HPE, what happens to SMCI? What's the worst case scenario?
Well, the most immediate concern is a trading halt. Like a full-blown collapse and bankruptcy seem unlikely, but delisting is a real possibility.
Delisting, for those of us who aren't finance experts, what does that actually mean?
Basically, it means SMCI's stock would no longer be traded on a major stock exchange.
So what happens to their stock? It just disappears.
Not completely, but it becomes way harder to buy and sell. Think of it like going from a big, bustling market to some quiet back alley trade.
Okay, and how does that affect SMCI as a company? What are the ripple effects?
Well, first, it makes it much harder for them to raise capital. Investors are less likely to put money into a company that's not listed on a major exchange.
Right, it's a sign of instability.
Exactly. It also limits their funding options, which is a problem when they're trying to navigate a crisis like this.
So delisting hits them from all sides: reputation, access to capital.
Yeah, and there's another layer to this. We mentioned how companies sometimes use their stock as collateral for loans. If SMCI's stock value drops because of delisting, banks could start demanding more collateral or even early repayment of those loans.
Ouch. So delisting could create a domino effect.
And then there's the impact on investor trust. Delisting erodes that trust, and that can affect partnerships, suppliers, even employee morale. It casts a shadow over their entire future.
Definitely not a good look for SMCI.
Not at all. And it raises a crucial question. What does all this mean for people who own SMCI stock? What should they be doing right now?
Right, they must be feeling trapped. Selling now might lock in losses, but holding on feels super risky. What does the analysis say?
Well, the first thing is to be prepared for a bumpy ride. The situation is changing fast, and the stock price is likely to be volatile. But beyond that, understanding the auditing process is key.
Right, SMCI is looking for a new accounting firm to try and sort out their financials.
Exactly, and that new auditor will probably issue a report that could lead to a full SEC review.
And knowing SMCI's history, I doubt the SEC will be going easy on them.
You're probably right. The SEC is usually very thorough, especially when dealing with companies that have a history of reporting issues.
So what are the likely scenarios then? What can the SEC do?
One possibility is that they could require SMCI to make specific changes to their reporting practices, but given that they've already had chances to fix these issues, that seems less likely.
Okay.
The more likely outcome, unfortunately, is a trading suspension.
Wow. They could actually halt trading of SMCI stock completely.
It's a real possibility, and if that happens, shareholders are looking at a long wait, potentially months, even years, while the SEC investigates.
So their shares would be frozen, no buying or selling for who knows how long. That's a tough spot.
It is, and it makes the decisions facing current shareholders even more difficult. There are no easy answers here.
Okay, I think I'm starting to get just how serious this is for SMCI and anyone who owns their stock.
Mhm.
But let's say the worst happens, trading gets suspended, and they can't meet those exchange requirements. What's next? What happens to SMCI then?
Yeah, that's a big question, right? It takes us to this part of the market that a lot of people find kind of mysterious, the OTC market.
OTC market. I've heard that term, but I'll be honest, I don't really know how it works. Is it like the minor leagues for companies that don't make it to the big exchanges?
It's not that straightforward, but there are some similarities. The OTC market is less regulated, more decentralized. It's where companies that can't meet those listing requirements for places like NASDAQ or the NYSE can still trade their stock.
So it's still legitimate, but maybe a bit more like the Wild West.
You could say that the biggest difference is liquidity. On the major exchanges, there are tons of buyers and sellers, so it's easy to trade stocks quickly and at a price that reflects their value. On the OTC market, things are much slower.
So if you need to sell, it's harder to find a buyer, and you might not get the price you want.
Exactly. You might have to accept a lower price or wait longer to find someone willing to pay what you're asking. It adds a whole new level of risk for investors.
That makes sense. So how does a company like SMCI end up on the OTC market in the first place? Is it always because they did something wrong?
Not always. There are actually three main ways a company could end up on the OTC market. The most common is failing to meet those financial or trading standards we talked about. If they can't maintain a certain stock price or trading volume, the major exchanges might delist them.
So it's like they're not interesting enough to investors anymore.
Yeah, they're not generating enough activity. The second way is a bit more serious ongoing compliance issues or delays in filing those financial reports. If a company can't keep their books in order and be transparent, the exchanges might delist them to protect investors.
And with what's happening with SMCI, that seems pretty likely.
Definitely something to keep an eye on. Now, the third way is a bit different. Sometimes a company chooses to delist voluntarily.
Wait, why would a company do that? That seems like a bad idea.
There are a few reasons. Sometimes the costs of staying listed on a major exchange are just too high, especially for smaller companies. The OTC market has fewer regulations, less paperwork, and lower fees.
So it's like downsizing from a fancy apartment to something smaller and more affordable.
That's a great way to put it. But I think we can rule out a voluntary delisting for SMCI. Their situation seems much more like those first two scenarios we discussed.
Okay, so we've covered what delisting is and how the OTC market works. But let's go back to those who own SMCI stock. What should they do now?
The analysis is pretty clear. It says that people who own SMCI stock are in a really tough position. Selling now might mean losing a lot of money, but holding on is really risky.
That's a hard choice.
It is. But we have to remember that this is about real people and their money, and there's no easy answer.
So what should they do? Is there any advice in the analysis?
It emphasizes staying informed, paying attention to any news about the audit and what the SEC is doing.
Because ultimately the SEC decides what happens to SMCI.
Exactly. It also suggests being prepared for things to be difficult if trading is halted. And if SMCI ends up on the OTC market, be ready for the challenges of selling shares there.
So basically, be ready for anything. It's going to be a long process.
Yeah. You got it. This is a high-stakes situation, and there's a lot that could happen. But the more you understand, the better prepared you'll be.
Wow, we've covered a lot. The fallout for the AI industry, what delisting means, and how the OTC market works, and the tough choices for SMCI shareholders. What's coming up in the last part of this deep dive?
Well, now we're going to look at the bigger picture. We'll talk about how this whole SMCI situation might change how AI companies are regulated. Could this lead to stricter rules and more oversight? That's what we'll discuss when we come back.
Welcome back to the deep dive. So we've talked about what's happening with SMCI right now and the possibility of them ending up on that OTC market. But let's step back and look at the bigger picture here.
You know, what's really interesting about this is how it could change the whole regulatory landscape for AI companies. Like, Could this be the thing that finally makes regulators get more serious about financial oversight in AI?
It makes you wonder, we've definitely seen a push for more scrutiny of tech in general, but AI is still pretty new territory.
Exactly. And that newness creates some unique challenges for regulators because AI companies move so fast, they're constantly innovating and pushing boundaries. Traditional financial reporting might not be able to keep up and accurately show what's really going on.
So it's like trying to regulate something that's constantly changing and evolving.
Right. It's a tough job. But this SMCI situation might be the wake up call regulators need to rethink how those financial reporting standards should be adapted for AI companies.
So maybe we'll see a push for even more transparency, stricter audits, maybe even completely new regulations just for AI.
It's definitely possible. And I wouldn't be surprised if investors start demanding more accountability too, because at the end of the day, trust is everything. And finance and incidents like this shake that trust and create uncertainty.
And if companies don't step up, could we see more situations like SMCIs happening down the line? Is this a sign of things to come?
It's a valid concern. This whole thing could be a wake-up call for the entire AI industry to attract investment and keep the public's confidence they need to show they're committed to transparency and doing things the right way.
It's like a reality check for everyone.
Exactly. There's no room for shortcuts or playing games with the numbers.
So while this SMCI situation is creating a lot of stress right now, it could actually lead to a stronger, more trustworthy AI industry in the long run.
I think that's a great point. Sometimes these tough situations force positive change.
Well said. We've explored so much in this deep dive. The immediate impact of what's happening with SMCI, the whole thing about delisting and the OTC market, and the tough choices people who own SMCI stock are facing.
What's the one key takeaway you hope our listeners are walking away with?
I'd say the biggest takeaway is that the AI industry is at a turning point. It has huge potential, but it's facing some unique challenges, especially when it comes to financial transparency and accountability.
Hmm.
The SMCI incident, no matter what happens, highlights the need for a more mature and responsible approach to financial reporting in this sector. That's a powerful point, and as always, staying informed is key. Keep an eye on how things develop with SMCI, how regulators react, and how other AI companies adapt their financial practices. This is a story that's still unfolding.
And maybe even more importantly, think about how this impacts your own investment decisions in AI. What are you going to look for when evaluating these companies now? What red flags will you be watching out for?
Those are excellent questions to consider. And with that, we've come to the end of this deep dive. Thanks for joining us. And until next time, just get curious.